Have you ever wished you could get an edge on the market by predicting and reacting to major economic news releases? Well, you're in luck because today we're going to dive into the world of trading the news, also known as the economic calendar strategy. This trend is taking the trading community by storm, and we're going to break down the specifics of how to trade it successfully. The economic calendar strategy involves identifying key economic releases throughout the day, such as GDP, inflation, and employment numbers, which have a significant impact on the market. We'll be focusing on the U.S. economic calendar, which is the most heavily watched and traded. To trade the news effectively, we need to understand the concept of market expectation. Market participants expect certain economic releases to impact the market in a particular way. For example, if the U.S. GDP release is expected to show a strong growth, the market expects the dollar to strengthen and stocks to rise. Conversely, if the release is expected to show a weak growth,